shift in Taiwan with new opportunities, the alphabet, and China's market bear. Ma Ying-jeou won the presidential election on Taiwan with 58% of the vote, ushering the Kuomintang, or KMT, or Nationalist Party, the party founded by Sun Yat-sen, back to power after a contentious 8-year absence, during which the economy of Taiwan has stagnated. Ma is to the party born, raised on Taiwan, and has advanced degrees from the USA, including a doctorate from Harvard. Ma is committed to quick action on closer business and transport links with mainland China across the tightly controlled Taiwan Straits, including airspace. But the first direct action may be accepting a gift of pandas, Beijing's favorite way to put a fresh face on old ties. It is hard to underestimate how significant this political change on Taiwan is, particularly while press outside Asia continues to obsess on Tibet. For while the Chinese frontier may appear unsettled on its Himalayan border, the island of Taiwan, with 23 million people and one of the largest economies in the world, is growing, however slowly, closer by popular choice. The proponents of independence for Taiwan had their biggest defeat in many years this past Saturday. The vast majority of people on Taiwan, according to the latest polls, want status quo and a decision on Taiwan later. Of the decision later crowd, about an equal number want unification as want independence, around 10% each. What we can expect now is greatly increased investment and trade flows, particularly to Shanghai and the coastal areas across the straits such as Fujian and Zhejiang provinces, and an increase in cultural influences in pop music, television, and maybe someday a return of the KMT to national politics. During the last election cycle in 2004, the KMT was rumored to have had operations in Fujian and Shanghai, and in 2005, Ma Ying-jeou's predecessor toured China in an historic tour. The Taiwan Exchange's benchmark TAIEX index surged March 24, up almost 4% to 8,865.35. Goldman Sachs says the index may go to 10,000 this year, and their call was answered by a major influx of foreign buyers. Morgan Stanley is also bullish on Taiwan equities, saying they are the best buys in emerging markets, undervalued and underowned. The TAIEX, sometimes called the TWSE or TSEC, is a weighted index of all listed common shares on Taiwan's exchange and was started in 1966. As recently as late January, it was below 7,500, where it had essentially peaked back in May 2006. Shares in all major sectors rallied, with construction companies leading with a 6.7% gain, and microchip companies, strong in Taiwan, saw good gains as well. Expect increased offshoring of chip production, particularly to Shanghai, to accelerate soon. Integration with China, however, will carry some risk for Taiwan shares of older traditional companies such as China Steel, Formosa Petrochemicals, CPC Corporation, as they are subject to intense competition from their big mainland rivals. Also today, the new Taiwan dollar hit a 10-year high against the US dollar at 30.201 to the dollar. This week's alphabet starts with 2610.TW for China Airlines, the top carrier in Taiwan, which gained almost 15% since last Monday. Sellers controlled the action today, but price was still up over 2.5% at close March 24. China Airlines has been planning since 2000, if not earlier, for direct flights to mainland China, particularly cargo, with considerable investments already in Shanghai. Direct Air Links is one of the first integrations expected when Ma Ying-jeou is inaugurated. The Hong Kong IPO market is flat, if not dead. Two Chinese firms dropped IPO plans this week after lackluster interest: Evergrande Real Estate Group and Wingfat Printing. China Meilong Group, a chemical producer out of Jiangsu province north of Shanghai, is planning an IPO on Hong Kong to raise up to 1 billion Hong Kong dollars, around 128 million US dollars, but not expected until the third quarter, according to the South China Morning Post. China Life, China's biggest life insurance company, invested 300 million US dollars in the giant Visa IPO on Wall Street, and its stake has gained about 50%. But Ping An Insurance has not fared so well. The company has now bought up to half of the Dutch financial conglomerate Fortis NV and spent almost $3.5 billion US dollars. The company is being criticized for its acquisition binge and its shares fell almost 10% today in Shanghai. Wags in the market are blaming Ping An for Shanghai's losses overall, as Ping An's troubles precipitated the current slide. And now for the bad news. Shanghai and Hong Kong are bearish. The Hang Seng closed at 21,108 before Good Friday, down almost 3.5%, and back to a plateau around 20,000. The Hang Seng China Enterprises fared worse, down 5.27%. In Shanghai, the composite index ended March 24 at 3,626.19, down almost 5% after falling all day. It remains down from the start of the year and now a bear. The CSI 300 is down almost the same amount and closed March 24 at 3,857. Shanghai Bs are barely up from their collapse last week, closed today at 259.31. Shenzhen Bs down again to 544.32 and look stuck around 500. I'll see you next week on the Sinomania Show.